What's good, prolific family? Coming back with another banger from last week's price action, right? Last week we had NFP. I know it's been some time since I've dropped a YouTube video. I've been taking on a lot of different things, and I really haven't had time to record, edit, and then post everything to my YouTube channel. But I am managing to find some more time to start to dedicate towards this YouTube channel so I could put out more content for everybody who watches and supports the prolific ones. And without further ado, let's get right into it. So today I'm going to be going over the price action that I traded during this week's price action. We had NFP week, so I took trades on Monday, Tuesday, Wednesday, Thursday, and some on Friday. So this entire week I took trades every single day. Now, I'm going to be going over the reason why I had a specific bias for price to be bullish. I went over that on my Sunday Zoom. I have Sunday Zooms every single Sunday, 8:30 p.m. New York time, where I go over my bias for the indexes. And since I mostly trade NASDAQ and YM, or Dow Jones US 30 for those who trade forex, I give my analysis because those are the two instruments that I trade. Right. So this week my expectation on price was to be bullish. I have dropped in my chats right up here. So this was on Sunday, right? Looking at the previous week's price action, right? I see that price, we had this range created. Now I had two ideas, right? If price was going to be bullish, but if price was going to be bearish. I was in favor of price being bullish because of how price was already trading, the rejection that we got out of this range that price created. And if we were to create a swing low, what I would need to see price do to make new all-time highs, right? We have relative equal highs for those who study smart money, institutional concepts, or ICT. You would understand what liquidity is. So I wanted to see this week's price action be bullish, along with the news drivers that we would have coming out this week, and new all-time highs be made on the Nasdaq. Now, this entire week, I only traded the Nasdaq. I did not trade the Dow Jones or YM. So this week I was focused purely on taking trades out of the NQ futures. Right. So my bullish bias going into this week, as we can see in hindsight, we see this week's price action is, or last week's price action, bullish. Now, the reason that I seen that was because of the range that I saw price create, like I just went over before, where we had this range. And I was looking at this as an area of price trading into a discount. And the rejection that we got out of this area was on May 31st. So I wanted to see price create the low of the week, if not on Monday, then Tuesday, since we did have news coming out on those days as well. Now, you may be asking, why didn't I expect price to be making the low of the week on Wednesday? Right. I wanted to see Monday and Tuesday's price action start to accumulate, and then Wednesday we get the distribution higher because we have the ADP non-farm employment change, which usually causes like a lot of volatility into the market, and price would more times than not go in one direction. And since I had the bias of price being bullish, I had the narrative as to why price was going to be bullish in my favor. The news we see price drive on Wednesday, excuse me, on Wednesday's price action to the upside, right? We see that right here. So just breaking down everything, right? So I just broke down my bias as to the reason why I was expecting price to be bullish this week, right? And we see all-time highs get created. Now, let's take a dive into the trading journal. So this is the first trade of the week. I take on NASDAQ. And as you can see, this is at 10:17 a.m. New York time. Take a look at the screenshot. I do not trade in hindsight. Everything that that's why I like to have my before and after screenshots, because there are people who like to, hate for whatever reason because they can't trade, or because they don't like that somebody else is able to be consistent and they're not able to get to that point yet. People just find it a lot easier to hate. So I have screenshots of everything before and after. And if I don't have a screenshot of it, of me looking to get into it before, I would have a screenshot of me actually participating in that trade with an open position. So as you can see, right, this is me taking trades on TradingView. This is me taking a trade on an Apex account, right? Apex futures account. And as you can see on TradingView, I am up 114 ticks from this position. So this is on the 3-minute time frame. The reason why I go to the 3-minute, right, even though the entry was found on the 1-minute, I like to look at the higher time frame, so I don't confuse myself with price action. Sometimes looking at the 1-minute, staying on the 1-minute, can cause emotions to come into the market, and you don't want to react on your emotions. So I find it a lot easier to, once I find my entry and I'm already in, my risk is already accepted and defined. I like to look at the higher time frames just so I don't get caught up on what the lower time frame is doing. Right. So that's a big tip for anybody who may be struggling with watching price live. If you take your entries on a lower time frame and you already understand your risk and you've already accepted your risk to some degree, take off don't go on a lower time frames. Like, just go onto the higher time frames. Like, if you're on a 1-minute, if you find an entry on a 1-minute, go to like the 3-minute, the 5-minute, 15-minute, and just watch price from there. Right. So it stops you from taking these or making these unnecessary decisions, or like these split-second changes in in your your bias, or your position. So you're able to actually learn how to, over time, trust your system and trust your trades. Because at the end of the day, if you're taking trades and you're incurring some kind of risk, you're obviously anticipating some kind of reward in return of you taking that trade. So let your trades play out. If you're going to be a pussy and close out because you see price fluctuating, that's normal, right? To see price fluctuating. But if you're going to do that, you should not be taking trades in the first place on a live account or on a funded account or for a challenge to get funded, right? You should just be either demo trading or just marking up your charts and just watching price as it goes without taking any kind of positions on a demo or a live account, right? Or a funded or evaluation account. So what I do for myself whenever I am looking at my screenshots, I always type it in my journal, just my before and after journal, right? You see the prolific trading journal. And I talk to myself what I do while I'm in these trades. So on this trade right here, I believe I wrote down I took partials and then I took a break even, right? It'll come right back to this buy right here. So I took partials at around 120 ticks, and then price came back, taking me out at break even. And that was fine. I had the idea that we were going to be bullish for this day, but we see price in hindsight going into Monday's price action. Right during New York, we see price run buy stops, sell off, and trade into a discount of that range. Also, for those wondering what the red, purple, and the blue is, this is an indicator called sessions. I use it just to delineate the London Open, the New York Open, and like the New York and London sessions. It's not anything that would help me take a buy or sell necessarily. It just makes it a lot easier to see the ranges that price creates during London, New York, and New York, the New York AM session and New York PM session. Just so I'm able to, like, whenever I go to back test, it's a lot easier for me to find the actual times that I take trades rather than plotting like the vertical lines. So it just makes my life a lot easier. So as we can see in hindsight, this is Monday, June 3rd, 2024. Price, yes, we get that buy up, but then we ultimately see price start to sell off. And that's where I this is where I made the most profitable trade this week. So as you can see, 10:44 a.m., I see this fair value gap price creates, right? We fail to take buy side liquidity and we start to create fair value gaps and displacements at the downside. And that gave me the idea that, all right, if we are going to take sell side liquidity, where can we target sell side liquidity most recently created, right? And we have right here the low of London, right? So let's use the bar replay tool just so it make it a little bit easier to go back in time to see why I was looking to target as my first target the low of London. So right here, what do we have? We have relative equal lows, right? This is London's low that price was looking to target on Monday. And then we have the low of Asia, right, which would be right here. So just going back into this trade, right, you see this is the before screenshot. This is me being in the trade. Now, if this was a forex broker, I know for a fact my stop loss would have got triggered and then price would have went in my direction because of something called spread. Now, trading futures, futures essentially and virtually do not have spread. Sometimes, there is going to be like a small, tiny difference in price, but for the most part, there is no spread in futures. So I'm grateful for this feature when trading futures because I'm trading futures, that there is no spread because I was able to capitalize and maximize my profit very, very early in the week. So as you see, the screenshot is me being up 58 ticks. And now, just to explain a little bit about my system when it comes to managing my position, when price is up, so I usually go for 5-to-1 risk rewards, right? Every single trade, I'm risking 30 ticks to gain 150 ticks. Now, when price is up 60 ticks, I move my stop loss from 30 ticks to 15 ticks. And then once price is up 90 ticks, I go break even, right? Because I'm about a third of the way to my full take profit. On this day, because of my targets, I went for I believe like a 10-to-1 risk reward. Let's just go back and just let me confirm this for you guys watching this. So the entry was exactly at 18,667. So 18,667, 75. All right, so you see right there, price damn near almost hit my stop. So as I was targeting the low of Asia, right, 53. So just to show you guys the risk to reward on this trade. So here we go. So it was a 15-to-1 risk to reward on a Monday. On a Monday. So this is the me being in this trade. I moved my stop loss to 15 ticks. So if price came back for, instead of taking me out of break even, it will come back to my entry because sometimes price would like to retest the entry and then go in the direction that I was intending. Sometimes it doesn't, so that's why I gave myself 15 ticks for moving my stop loss. As you can see, I take another screenshot. I'm up 133 ticks, and I was looking to take partials at the low of London. Right, another screenshot, 268 ticks. Right, buy limit That is my TP order for futures. And now I fully close out right at 18,573. So the idea was a 15 to 1 risk reward, but I end up closing out 573 right here, right, for a 12.6 to 1 risk reward on a Monday for 378 ticks. That is phenomenal price action on a Monday. This is a great execution that I took on my end, great trade management. And even though price did trade and almost hit the first area, the last area that I was looking for price to trade to as one of my targets, which was the Asia low, I felt like price was going to do a retracement, and you don't want to assume that, yes, price can retrace, but you don't want to assume this is just going to be a retracement and then price continues going in the direction. You want to take your money when price gives it to you. So I felt very comfortable with not just the risk reward, but also the profit that was given to me on this trade for me to take my full profit down here without taking any partials. All right. So as you can see, fully closed out. Now going into Tuesday's price action, right? So Tuesday, we had 10 o'clock news. Now, Tuesday was a funny day, right? For sure. Tuesday was a funny day. We had a lot of back and forth price action. Going into the New York Open, as you can see in hindsight. But the idea that I had for Tuesday was for us to buy out of this order block right here. Right, which we see price trades into it and then starts to buy out of it. Now, as I was watching price and taking trades within this area, I see a lot of failure to take buy side liquidity, which is what you would want price to do whenever you're taking buys out of a bullish PD array. Right, price trades into it right here, trades back a little bit deeper into it, and then it takes out this high, but we fail to create displacement. So price was just moving back and forth on this order block. So as you can see, right, this is before at 9:02. This is the time of the screenshot that I took it, but I dropped it in my journal at 9:16. But you can see the screenshot says 9:02 is the time of the screenshot. Right, let's go to the 15-minute. So around this candle's time of it being printed and created, this is when I took that screenshot. That's when I recognized that we had an order block that price could trade into and trade away from it. I'm not going to go over why I was looking at this as my order block, just for the purpose of me going over every trade that that I've taken this week. So the first entry right here, this is at 9:38, the time of the screenshot. I see price trade down into that order block, and then to create that fair value gap for me to take a buy. So let's go into the trade, and it's right here, right? Price was kind of moving unexpectedly. If once I get my entry, I don't like to see price just consolidate around my entry. I allow price to do that, but what I don't like to see is price failing to move above buy side liquidity. And the most recent high that I wanted to see price move above would be this high right up here. Right, the high that was created, I believe. Let me just double check. 9:30. Right, but it did not. So as you can see, let's go to everything right here. So this is where I found my entry at. Price did not hit my stop loss because I managed my position. Right, once I was up 60 ticks, stop loss goes in half. Price gave me about 90 ticks. I moved price to break even, and I ended up taking a break even on this. So on Tuesday's price action, right? Because I took another entry on Tuesday. This was the first break even, the first trade of the day, and I wasn't worried about it. I had faith in my bullish bias. However, I did see that price could potentially take a move lower. So that's what brought me to this area right here, right? I see price respecting some short-term highs in the market, and I see that we can potentially target sell side liquidity, right? We have these equal lows down here. So this was the second trade of the day. 10:58 was the time of the screenshot. And this was the entry right here. And as you can see, I did take a break even on this trade. The market was moving back and forth in this direction, excuse me, in this range, and it was not looking to take sell side liquidity. So I just decided to move my stop loss instead of having it at 15 ticks. I moved my stop loss to break even. The market came back, took me out at break even on this sell. So I said I was done for the morning. Now, the last trade, or one of the last trades that I've taken on Tuesday, I had my entry right here, but for some reason, the market put me up like up here, and then the market ended up hitting my stop loss. And for some reason, when I went to edit my position, because I usually have my TP and stop loss preset, it gave me a stop loss of 15 ticks, which is why price did end up hitting my stop loss on this buy right here, but it did go in my direction. I was just a little bit confused as to why it did that. So you see right here, for some reason, this hit stop loss. I must have put a smaller stop loss without realizing, because price did not trade 30 ticks towards my stop. Uh, but price, instead of going for the previous day's high, you see me edit. I'm not edit. You see me say that I changed my TP levels to 150 ticks, and price would have hit my take profit for 150 ticks had I still been in this trade. But I accidentally put the wrong stop loss, so I just left it as it was. And this is just me going over a little recap of the day, right, for Tuesday's price action. Bullish idea from this 15-minute order block was very accurate. However, price action did not give a clean entry, right? It did not, as I was looking at it at the time of the price. So going into the 5th, June 5th, I have, right, this 15-minute order block, but within this 15-minute order block, I have this 5-minute fair value gap that I want to see price trade into. Now take a look at the time, 9:05, right? So let's go into Wednesday's price action. And also take a look at Wednesday's news, where we have 8:15 news coming out, 9:45, and 10 o'clock news. So Wednesday was another very profitable day. Excuse me. So this same exact order block that I was looking to see price trade into, price respects it and then trades away from it. I found my entry on the 5-minute, right? This was the idea that I want to see price do, right? So this was at time of the screenshot was at 9:03 a.m. Went to see price trade down into this 15-minute order block and then trade away from it, whether we would consolidate or not. Didn't matter as long as I found my entry. And then I took out my, my surgical tools, got a little my hands a little dirty in this trade right here. And I saw, all right, On a lower time frame within that 15-minute order block, we have the fair value gap. We have price creating another shift in market structure. So this is going to be an area that I saw as a high probability buy setup. And as you can see, right, going into the 9:45 news, or actually no, this was 10 o'clock. Sorry, so 10 o'clock news, price trades right down to my entry, and then it trades away from it, giving me 200 ticks for this buy, because that's what I was just going for the day. So I'm already up a calm, 500 or 600 ticks from the sell and also the buy from Monday. Uh, break even on Tuesday, another profitable day on Wednesday. Right, another buy that I took on Wednesday was right here, and I ended up closing it out early. Right, I did have a reason for why prices I didn't feel like price was going to continue to move higher because we had already taken out all-time highs. So it didn't really, sit right with me to hold that buy. Even though I was, saying to myself, I'm up 90 if at 90 ticks I'll take partials. Because price was at all-time highs, price action can be a little iffy. So I just decided to close it out. And as you can see right here, although I closed out early, price would have given me a break even because of how I managed my position as usual. But I am grateful that I was able to secure profit earlier today. All right, so just taking a look at this, the entry was right over here. And the way I managed my position, price gave me this kind of movement. I would have moved stop loss to break even right down here. So I would have ended up taking a break even on this anyway. Right. Had I not moved my stop loss or anything at all, yeah, price wouldn't have hit my stop. And yes, price would have hit my full TP. I'm not worried about that. I already made money in the morning, so there was no need for me to become greedy, taking this and holding this for the, to put the profit that I already made in the morning and also earlier in the week at risk. Right. So that's just me being smart as a trader and also as a money manager. Going into Thursday's price action, this is the first area, right? So price, we had made all-time highs on Wednesday, and then we made new all-time highs on Thursday. No, so the time of this price action was 8:56 a.m. And this one gave me 60 ticks. I moved my stop loss up. Then I adjusted my stop loss. All right, not my stop loss, my TP to 200 ticks. And now, as you see, I'm updating my trade. I'm up 100 plus ticks, and I'm holding for full TP. I take a break even on this buy. Right, price was at all-time highs. So for me to continue to buying price at this time, I'm going to show you guys the price action. So right here, right, this is the 6th. The first buy, I ended up taking a break even. Right, price gave me about 117 ticks. And then price ended up reversing at the 9 o'clock open, the 9:30 open, excuse me, and then I take a break even, and that's fine. It's a part of the game. I managed my position very well because had I not, I would ended up taking a loss or half a loss if I had not managed my position how I managed it. Now the second entry, right, was for a sell. Right, this is at 10:02 because I saw, all right, price, we're at all-time highs. It looks like we created displacement. So I wanted to see if we would have a potential sell. Where was it at? 10 o'clock. So right here was the first sell that I've taken on this day, and we see prices trade right on through the stop loss, right? And that's fine. You know, I take negative 30 ticks for the stop loss for the sell. No worries. Now, going into the next trades, what keeps me confident is by allowing myself to understand, all right, look, I have profit that I made earlier in the week, and I understand like each trade that I take in the future, while I still have profit in my account, I'm risking smaller portions or smaller percentages of that profit that I just made. So I'm not, you know, freaking out because I'm over leveraging because of the profit that I just made and risking not just the profit that I just made, but also more of my own equity, if that makes sense. So you want to manage your money very smartly while you're taking these trades. You don't want to just say, "Oh, I'm up, you know, 500, 1,000, 3,000. Let me risk on my next trade, you know, 750. Let me risk 1,000 on my next trade because I can, you know, if the market does go in my direction, I can make, you know, 5,000 or 10,000." That's called gambling. You don't want to do that whenever you're taking trades, right? Especially when you're already in profit, right? Risk smaller. Where, you know, focus on your consistency. So this sell hit stop loss, and I seen, all right, cool. Price, we still have the potential to buy up, right? Price traded down into that 4 hour fair value gap. And I had the idea that, all right, we have buy side liquidity. If we are going to be bullish, we could target these highs to the left, right? These highs. But I also kept in mind that we had this area right here that price may reverse out of. So going into this position, right, you see that screenshot was at 10:23 a.m. You see that I give my entry a little bit lower, right at the bottom, the very, very bottom. And I have this area, this bearish fair value got marked up because of how price was already trading, right? All-time highs, the uncertainty that we are going to continue to take buy side liquidity. So as I'm in this trade, managing my position, right, you see stop loss break even because I'm up 90 ticks. 120 ticks is right here is my 4-to-1 risk reward because I was risking 30 ticks. This is where I was looking to take a partial profit, right? I had two contracts on this buy. I take one partial or one contract off as price trades inside of this bearish fair value gap. And just going into the price action right here, right? The entry. Now at 120 ticks, or as price traded into this bearish fair value gap, this is where I start to take partials and I take a contract off. So I take a contract off at the 50% of this fair value gap. So that is about 130 ticks or so. That's what I took half of my size off of this position. And then I see the market just starts to trade back down to my position and fully taking me out at break even. Right. So first trade, also profitable, but took a break even after taking profit. Second trade, took partials again, break even. You know, nothing you could do about that. So going into the afternoon session, I still had the idea that we could still potentially buy up. And on this position, price gave me 60 ticks, right? But then I moved my stop loss higher to 15 ticks to manage my position. I end up taking 15 ticks for the stop loss, right? This was me being in the trade, right? This is me moving my stop loss up. What does the market do? It takes me out negative 15 ticks. So I called it a day for Thursday. Now Friday, NFP, I did not participate in any of the down movement, right, that we got at 8:30. There was no need to try to even guess this movement at all because that's just gambling, right? Price, it took new all-time highs, or the previous day's high made new all-time highs, and then we see this run lower. I saw this area and I was like, yeah, this could have been a sell, but I did not want to take it. Instead, I was still trusting that price was going to be bullish. And you're going to see, right, me take a buy out of this area. And you're going to see me mark up this area, but this position right here, I did not take the buy out of. So just going back into my journal, right? That was the first entry that I wanted to see price trade down into and then buy up. But then I thought to myself, if we were going to be bullish, most likely we would not trade down into this area. We would just, stop inside of this area right here and then buy up. So that's why I had two positions on this, or two ideas for the buy on this. So the first one initially was for me to take the buy down here, but I ended up taking a buy out of here because this was the first area that price traded down into. And you're going to see what price does as I'm in this buy, right? So right here, 908. That's when I mark up this area, right? Price came 2 ticks away from hitting my stop loss, right? Stop loss was right down here, but I ended up holding because price did not take it out, right? Most traders would close out because, oh, price is like 2 ticks from my stop loss. Let me just close it out. No, just if price is going to hit your stop loss, let it hit your stop loss. So as I'm in this, right, the entry, 1910. Right, just so you guys can see, price came really close to hitting its stop loss, but it did not. And I wanted to go for 150 ticks because as I was watching price, I was like, we have 930 right here. I wanted to see if 930 we can push up just so I can get my take profit. But ended up taking partials on this buy right here as price started to move closer to the 150 ticks. But I ended up taking a break even on this. And then I kind of was like, waiting for what price was going to do because as I was watching price, I see 930 create this fair value gap. So NFP's price action usually gives a lot of back and forth movement. And what I mean by back and forth movement, it would trade into bearish PD arrays and trade away from it, inducing sellers to get in. And also it would trade into bullish PD arrays, inducing buyers to get in. Excuse me, enticing sellers and enticing buyers at the same time. So this is what confused me. I did not know if we were going to trade into this and then trade away, or if we were going to trade down into this and then buy away from it. Now, in hindsight, we can see price starts to move away from the area that I had initially marked up for the buy. And price, I wanted to go for 200 ticks on this. Price would have hit my take profit very quickly. So where is it at? So here we go right here. So you see me talking about did not edit. I mean, did not edit. Did not take this, even though the entry, the direction, and that stop loss placement were very accurate, which they were, looking in hindsight. Price right here almost hit TP for 150 ticks, but ended up taking a break even with a partial out of the market for one contract. Uh Now going into the other buy, which was right here, I have where is it at? Here we go. So this one hit stop loss and then price went in my direction. So you see me right here. SL hit, then price bought up. This was the idea, right? Price literally hit my stop loss and then moved in my direction. And then the final trade that I took on Friday, NFP, was out of this bearish fair value gap. Now, the reason why I saw this as a potential area for price to sell was because we moved above the 830 high, right? And then after price moves above the 830 high, we start to create what looks to be strong displacement to the downside. So I saw this as a potential area for us to go short at because we had equilibrium right there. This would be an area that I consider to be fair value for sells if we were going to be bearish. So just going into that right here, right price trades into the entry. I get my entry force, and then price starts to trade 66 ticks. I manage my position, and I move my stop loss from 36 to 15 ticks, and the market ends up taking me out for 15 ticks for my stop loss. However, aside from the small losses that I did incur on the trades taken this week, the bias was bullish. Most of my trades, right, just going from Monday the 3rd to the 7th, most of my entries were buys. Right, Monday took a buy, took a sell. Tuesday took a buy, took a sell, both break even. Wednesday only took buys, right? Only took buys on Wednesday. Thursday, buys, right? And you see the time that I actually go to sell, price says stop loss, right? Take another buy, price gives me profit. And then on Friday, mostly bought, even though some of the positions of me taking buys, price did hit stop loss. And the only time I took a sell on Friday was right here, and I ended up taking a half a stop loss. So that concludes this week's price action. I was very profitable this week for NFP. I managed my positions very well, and I also continued to trust my bias when it came to taking my buys. Yes, even though I did find myself taking some sells, I understood that the overall direction was bullish, so the sells would only be short term since they were counter trend trades. But that concludes this video, guys. I hope you enjoyed the content that was put out today. Definitely go back and just study the price action from the previous weeks and just find out how you would be taking your buys, taking your sells, whichever direction that you're looking at, whichever instrument you're looking at, and just be realistic with your expectations going into the next week's price action. With that being said, definitely drop some comments in the comment section. Like, share, subscribe. Definitely show some support. I will be having a lot more content coming out, and I will begin to be more consistent with dropping these videos. I would say like about a video or two every week, if not every other week. But yes, everybody, stay tuned and continue to support me. I appreciate everybody who does support me.